Hello and welcome to the Property Roundup on iPropertyRadio with myself, Carol Tallon, the show where we chat to industry experts to get a view on new trends emerging. This show is brought to you in partnership with Property District, changing the narrative of the industry. Today, I'm delighted to be joined by Tom McCabe, Head of Research and Insight with Cushman Wakefield. Tom, you're very welcome. Thank you for joining us today.
Thanks, Carol. Thanks for having me.
Delighted. So you and your team have been very busy. A report has just issued into the Irish hotel sector. So you might just give us maybe some of the headline findings from that report.
Sure, absolutely. Be delighted to. Yeah, as you mentioned there, in the last couple of days, we've produced an update on the outlook for the hotel sector. A sector that I guess has been through all sorts of trauma over the past couple of years with the COVID pandemic and so on, and even with a more uncertain economic environment in the last 12 months. I guess the key message that we have is that brighter times are here now, thankfully for the sector. I guess on a number of different fronts. So even if we look at it from a purely economic perspective, the last couple of years have been quite strong years for the Irish economy. We've had double-digit GDP growth rates, relatively low unemployment, solid growth in wages and so on. And we think that has done a good job in terms of supporting consumer spending and domestic spending on leisure as well. And that has allowed, I guess, the hotel sector to recover in the aftermath of the pandemic. I think what looks good for the sector over the medium term is that story looks set to continue. So we've seen the latest data on unemployment. It continues to drift slowly lower. Wages are still growing, albeit not at inflation rates. So we think that consumer spending might not be as strong as it has been in the past couple of years, but still strong enough to support decent growth on that side of the economy and decent growth on accommodation spending and hotel spending and so on. And I think kind of longer term, the picture for the Irish economy is still pretty strong. We've a fairly fast growing population. We've always had a very productive economy in terms of things like GDP per capita and so on. And they really are the DNA of strong long-term economic growth. So I think purely on the economic picture, I think the outlook still looks pretty strong for the hotel sector. I think the other advantage going forward as well is what we've seen out of the trends and traveller numbers as well. So I think back in the middle of the dark days in the pandemic, people might have been excused for wondering would travel ever happen again and so on. I think thankfully what we've seen through the traveller numbers from the CSO is that they actually have recovered quite strongly. We just noted in the report that when we look at this data on a rolling 12-month basis, traveller numbers into Ireland, which is I guess our proxy for tourism numbers, had recovered to 94% of pre-COVID levels, which is a very swift recovery. I think in the middle of the pandemic, everyone would have taken a result like that. So I think that again bodes well. I think when we look at those numbers, what we see particularly strong growth from the North American market, where probably things like the weakness of the euro versus the dollar has significantly helped. I think the other thing that maybe investors and people in the industry would have been worried about as well in recent years was the impact of Brexit. I think when we look at the trend in traveller numbers from the UK, what we see is in the aftermath of Brexit and so on, there was more of a flatlining rather than a decline, which was what was feared at that time, which again is a positive result. And going forward, I guess we just noted in the report, Oxford Economics produce regular forecasts for passenger numbers and traveller numbers into various different countries. They are forecasting tourist numbers into Ireland increase by an average of 11% per annum out to 2025, which again is another positive backdrop for the sector. So
yeah, there's so much happening. Thank you for going through that, because actually there's so much happening there, but there's some interesting dynamics behind some of the headline figures as well. So, for example, I suppose previously we would have considered the performance of the hotel sector to be very closely aligned to that maybe of the restaurant sector. And actually, interestingly, we can see that that's not necessarily the case. We can see maybe the restaurant sector struggling and the hotel sector actually doing very well. So I suppose it's good to get a deeper understanding of that. I know you've talked about traveller figures, both, domestic travellers, but also those coming into Ireland, irrespective of the market from which they're coming in. How much of the uptake do we know is as a result of tourism and business travellers versus the use of hotels for emergency accommodation? I mean, do we have a breakdown on that?
We don't have a very clear breakdown on it. I guess in terms of the data on the alternative use for accommodation, it is certainly, as you noted yourself, it has increased quite substantially. What we have seen, I guess, in the data that we do have to hand, is that it has been more of an issue in regional areas rather than urban areas, and it is definitely had more of an impact there. I guess, what we would take an awful lot of positivity out of is just the general pattern that we can see in the hotel sector in terms of occupancy. So the big increases that we've seen in occupancy over the past couple of years, to us, is probably the best signal of that flow through from consumer spending, from increased traveling numbers and so on into the sector. That to us is the most clear link between those two factors.
Very good. And Tom, you might be able to help me understand something. There's two very conflicting narratives out there around hotels, particularly when we look in the urban areas. So say, for example, we look at Dublin. So there's one narrative there to say that demand is so high that we have a shortage, and therefore that's calling into question maybe the value that is being offered by the hotel sector. And then the other maybe competing narrative is that actually we're giving planning for too many hotels, and that, that there's political opposition coming out and calling for no more hotels in Dublin. And those two positions are definitely conflicting. What's the reality? What's the data telling us about the Dublin market?
I think the data is telling us that obviously you're seeing improved trading conditions. You're seeing it in terms of increased occupancy. You're probably seeing a squeeze higher in things like room rates and so on. And to us, that reflects, I guess, a kind of healthy narrative for the sector. Are there too few or too many hotel rooms? I think that is a very difficult question to answer. To us, we see pipeline of, I think it's about 3,600 rooms over the next couple of years. Most of that is going to the hotel market, or is going to the Dublin market, excuse me. I would say that it's probably an amount of rooms coming to the market that can be absorbed. And I think it's given the underlying growth in occupancy, it's probably required at this juncture. In a historical context, those number of rooms, if they were delivered over the next couple of years, they wouldn't be massive increases in a historical context. And I just think, given the trajectory that we've got in the economy, given I guess the outlook for passenger numbers and so on, I think that can be accommodated quite comfortably. And of course, when it goes to issues about competitiveness and so on, and continuing to provide value for money, I think it helps those factors as well in an Irish context, because it is important. It's a very cutthroat industry across the world, so it is important that Ireland continues to offer value for money to international travellers.
Well, we're not even going to bring up the conversation around Taylor Swift and value for money in hotels.
I'm glad you're not, Carol.
That's definitely a conversation for another day. But can you repeat the figure there in terms of the pipeline? Because I'm interested to understand maybe the construction dynamics at play as well.
Yeah, so we have look, by the end of 2024, we see about 3,600 new hotel rooms forecast to be delivered to the Irish market. Now, about 70% of that is due to be delivered to the Dublin market, and a lot of it is destined for the economy segment of the market. That has been quite a fast growing area of the market in the past number of years. So we very much see that as servicing a growing part of the hotel market. In terms of the constraints on further development in the market, I guess they're very clear, not just necessarily for the hotel market. I guess we'd make these comments in general across commercial real estate markets. The two constraints are really construction inflation and financing costs. On that front, within our report, we've included a construction cost proxy, and that looks like it's slowing, or the rate of inflation is slowing, but it's not yet easing back. So that will continue to be something of a binding constraint for development beyond what we see in the current pipeline. On the financing front, I guess that's the thing. Everyone is waiting for the European Central Bank to at least signal that maybe the inflation war is won, and we can begin to normalize back towards interest rates that I think everyone would see as being more normal. On that front, we are seeing definitely progress on inflation. We do think we're past peak inflation. I guess what's important for the ECB going forward is the pace at which inflation normalizes. And things that are going to be very important in that dialogue are things like elements of inflation that have been quite sticky over the last while, food inflation, even services inflation, and so on. So I think those are the things to watch over the next number of months with regard to the ECB. As far as investors see things panning out over the next 12 months, I think investors generally see that we're quite close to the peak of ECB interest rates. And the current forecast suggests that we will probably maybe see one more interest rate increase, probably in July, possibly another one in September. But then those forecasts suggest that we might see modest cuts in 2024 as inflation hopefully continues to abate.
I think the financing issue is probably an interesting one. It's one I'd like to talk to you a little bit more about, because in terms of construction costs and inflation that's impacting construction materials, the shortage of material supply, these are things that are impacting across all sectors. But in terms of financing, that is quite sector specific, because we're seeing a lot more financing come in terms, or access to financing is very different for, say, the residential as opposed to for the hospitality sectors. So what are you seeing, or what are your expectations in terms of financing for not just the hotels that are in the pipeline for 2024, but even planning beyond that? Is there an international appetite for investing in hotels in Ireland?
Yeah, I think there is an international appetite. I mean, we've done a side piece of research actually, which we're looking to publish over the next couple of days as well, where we've actually inquired with operators around Europe and tried to ask them about what their most popular locations are. Now, Ireland has always been quite a popular location for operators, but what we found in our latest wave of research is that if we look at the top 20 locations around Europe, Dublin actually featured as number 3. And what we saw that operators were actually more positive about the Cork market as well. So to us, that's probably the best signal that that international operators still believe that there's a good growth story ahead in terms of the Irish hotel market.
Okay, number 3, that's not a bad position to be in. Who topped us?
Who topped it? I think London, maybe not surprisingly, and Edinburgh as well.
Okay, that's an interesting one.
Yeah.
So
it's funny. Dublin, as I mentioned, Dublin has always been quite a positive and popular location amongst operators. So it continues to be in those Champions League spaces in terms of popularity among operators.
And I think it's interesting if we even look at the Dublin specific market, but I mean, could you, and I know you've touched on some of these actually in sharing the insights from the report, but just again, looking maybe specifically at Dublin, what factors have accelerated the recovery?
Yeah, I think that's a really good question. I think it really just goes back to I guess a couple of things. The dynamics through the recovery have been a little bit different. I think what helped in the initial phase of the recovery was, I guess, first and foremost, a reopening in the economy. I think what that benefited most, and even trends towards staycations in the early part of the post-COVID period, let's say, I think that really boosted maybe regional locations more than the Dublin market. I think in the latter stages over the past few years, you still have the economy and so on still providing an uplift to the sector. But I think what's helped more for the Dublin market is that quicker than expected resumption of international travel patterns. That really very much goes hand in hand with business spending and so on, which on a relative basis is probably a little bit more important to the Dublin market than maybe outside Dublin. So I think those two factors, but overall it's definitely a reopening story post the pandemic. And I think definitely the economic backdrop across Ireland and the rebound has been quite impressive in the past number of years. And certainly when we look at all the fundamentals underneath the economy, there's still a good growth story there for the next number of years. So,
I suppose the growth story, I understand when you package all of that together in terms of the fundamentals, but when we're looking at supply and demand, there's still the conversation that needs to happen around the profitability of the industry, because the industries can withstand a certain amount of I suppose they can withstand a certain period of time where they can accept a lower profitability. And I think that probably happened during COVID, and then it happened during the recovery, but that's not sustainable into the long term. So actually, what do we know about the industry's profitability in a general sense?
Yeah, I think the real cue that we take from that, Carol, is what's happening in terms of occupancy and room rates and RevPAR. So what we've seen, those sorts of trends that we've seen for when we look at all the urban locations, all the main urban locations across Ireland, so Dublin, Cork, Galway, Limerick, what we're seeing in terms of occupancy, room rates, and so on, we're seeing that we're pretty much back to pre-COVID levels. When you look at some locations like Galway and Limerick, we've actually surpassed those levels. So the read-through for profitability is that things are probably getting better, and that the hotel sector has been maybe its ability to absorb the cost increases that it suffered over the past number of years has been slightly better than maybe perhaps some other areas in the hospitality sector, like the restaurant sector. So I think the read through for profitability is better. Now, in saying that, the hotel sector still faces plenty of challenges. So we've seen food costs increase substantially. We've seen staffing costs increase substantially. We've seen energy costs probably by far and away increase the most of all the cost categories for the P&L for hotels. I think as I said, I think when we look at things like room rates and the trend in room rates over the past while, I think hotels have been able to deal with maybe a little bit better the increase in food costs, staffing costs, and so on. The big issue for them, I think, is energy costs. I think for the hospitality sector as a whole, energy costs have been a real body blow. So I guess in terms of profitability going forward, that's a swing factor. What happens energy costs? Now, what we're seeing at the moment is we're seeing wholesale energy costs have fallen quite dramatically in the last 6 or 8 months. I think in the report we noted that since they peaked in August 2022, that they've fallen by 2/3. Now, that pass through to P&Ls for hotels has been quite slow so far. So, so that will be a big swing factor for profitability over the next 12 months. We do think that energy costs will begin to abate for hotels over the next 12 months, but obviously the quicker that happens, the better in terms of go forward profitability.
Very good. Tom, the headlines around commercial property in general, and not just in Ireland, globally, they've been pretty stark over the past quarter. So the trends that you're describing today and those reported in this latest report, how is that reflected maybe in transaction levels, or can you comment on that?
Yeah, I think transaction levels, as you mentioned, they have been very much on the back foot, certainly in the first 6 months of the year. There's an awful lot of factors that have gone into that, some of which we've already spoken about, things like financing costs, big increases in interest rates and so on, and what that means for asset pricing and so on. Has that had much of an impact on the hotel sector? I guess the hotel sector is maybe slightly different insofar as its journey to this point compared to other segments. The commercial real estate market has been different. During a pandemic, obviously transactions in hotels, fell off a cliff and so on. What we've seen is just a kind of gradual recovery in those sorts of transaction levels over the past number of years. What we've seen in the first 6 months of the year is around 130 million in transactions, which is probably on a par with what we saw in the first half of 2022. When we look at that versus other segments of the real estate market on a relative basis, that's probably quite a good performance. Going forward, I think what we can take from the current transaction data is there's an awful lot more interest from maybe Irish investors in the hotel sector, which certainly we would take as a sign that they do see this evolving growth story and this improving growth story, and to a certain extent they're buying into it. So going forward, we'd be pretty optimistic that we can build on those current transaction levels, and that for much as for any other segment, location is very important to international investors. And going back to what I said earlier about interest from investors in the Dublin market and the Cork market, we see that as a good indicator and maybe a good predictor of improving transaction levels over the next couple of years.
Very good. It's interesting to hear the increased interest from Ireland based investors. I think that's because that in itself is indicative of maybe a larger trend. But in terms of construction, we talked about how the pipeline of new supply is maybe 70% in the Dublin region. In terms of transactions, do you know the regional spread? Is that a little more balanced?
Yeah, it actually is a little bit more balanced. Some of the probably the biggest deal we saw in the first half of the year was the acquisition of the Brooks Hotel in Dublin. We also saw the Imperial Hotel in Cork sold, but you also have seen a number of transactions, smaller transactions around the rest of the country as well. So again, I think that probably speaks to improving fundamentals, particularly in urban areas around the country. And it speaks to probably an improving backdrop for trading and occupancy and room rates and so on, feeding into better revenues per available room.
That certainly looks positive. I suppose looking ahead at the next maybe 24 months, maybe 24 to 36 months, what are the key factors you think that will shape the Irish hotel sector's growth and stability?
I think the economy, what the economy looks like over the next 12 months, to what extent the Irish economy can withstand global headwinds. I think Ireland has proved to be really resilient so far, actually, in even if we look at economic growth forecasts from institutions like the ESRI, the central bank, they've actually been upgraded in the first half of the year, which to us, just highlights the resilience for the Irish economy. So the economic picture is a clear one. I think broader issues like costs and so on, I think energy issues are very, very important for the next 12, 18 months for the sector. And I think in terms of the wider development of the sector, clearly things like interest rates, the monetary policy outlook, they're all very important to determine whether that development pipeline continues beyond 2024. Because if we see that development pipeline dry up, post 2024, but we continue to see strong growth in the economy and so on. There could be a squeeze again and in pricing, and I guess that goes back to the whole issue about competitiveness in the sector. Ireland does need to remain competitive in the hospitality sector. So, and there needs to be a continued focus on value for money and so on to ensure that the sector is a success going forward.
Very good. Tom, thank you so much for taking us through that report. And just to let people know that that report is available on the Cushman Wakefield website and indeed on our own iPropertyRadio website. So you can access that and maybe take a read in some greater detail. It certainly makes for an interesting read. Thank you so much, Tom, for taking the time to go through it with us today. That was Tom McCabe, Head of Research and Insight with Cushman Wakefield. And that's all we've time for today. My thanks to producer Katie Tallon and to the production team at Hear Me Roar Media. And huge thanks to our show sponsor, Property District, changing the narrative of the industry. If you enjoyed this episode, please be sure to subscribe to the podcast and check out all of the other construction and real estate shows on iPropertyRadio. My thanks to you for tuning in, and we'll catch you on the next episode of the Property Roundup on iPropertyRadio.